Hello, my name is Michael Glass from emini-trading-coach.com. We want to thank you for coming by to watch our video today. Before we begin, we have our usual disclosures. Any symbols that we use should not be inferred as a trading recommendation. Any form of investing, stock, forex, futures, options, whatever it may be, involves a substantial risk of loss. You can lose all your money. Any strategies that we show is just to show the potential of the probabilities, and future results are not guaranteed. Any investment decision you make are solely your own responsibility. Trade at your own risk. So let's talk about the week that was. This is our weekend wrap up for December 4th, 2010. So key events of the last week, we can see that all three major indices rose pretty good this week, and you can see, we're almost up 10% on the Dow and S&P 500. We're up almost 15% on the NASDAQ for the year. This certainly was a good week for the market. All 10 sectors rose, led by materials and energy. 89% of the stocks in the S&P 500 closed in the green this week. We did have some overseas news. The week did start off a little slow because there was some more Ireland debt concerns, so the market actually started lower. But the EU came in and said there could be some more funding, so the market rallied. We also had a good ADP report on Wednesday, which basically started the end rally of the week, Wednesday, Thursday, and Friday. However, on Friday, we did have a disappointment on the November employment. We got a rise of $39,000 when it was expected to be $130,000. So I was watching a little bit of TV there, CNBC, watching the pundits, and they were talking about $250,000, and it was $39,000. And we initially dropped, but of course we had a good rally into the close. Also, with the November employment report on Friday, we had unemployment rise from 9.6 up to 9.8%. Going forward to next week, we really don't have anything else. Remember, we're in December now. People are starting to take their money out of the market, lock in their money for the year. So the volume may get a little bit light, especially the closer we get to the holidays. And so you can see we really don't have anything on the earnings front, nothing on the economic front on the next couple of days that could move the market. Maybe Michigan sentiment on Friday, but we really are kind of light on news events. As far as where we are, because of that late rally, Wednesday, Thursday, and Friday, we are sitting basically at the April swing high and the November swing high. We're right there, fractionally above it. So we still want to see if we can close firmly above this. So we're still going to call it resistance. As far as support, we still had the May 12th swing high. That's where we started at the beginning of the week. We also had the 200 simple moving average on a weekly chart, and the 50 exponential moving average. And we're going to bring back our point of interest if we do have the ability to close above the April and November swing high. We do have a lot of free space, especially light volume, all the way up to about 1274. So we really can move if we haven't been here since 2008, minus this April and November closing. So if we are able to keep moving, we probably can get a nice move higher. Let's go ahead and pull up the charts and take a look. Okay, before we get to the charts, I do just want to make sure everybody knows we are on Facebook. We have a page on Facebook, emini-trading-coach, high probability trading setups, where we're posting our videos and our blog posts. So make sure you join our page, emini-trading-coach, high probability trading setups. And of course, we're also on Twitter, but we are emini-coach on Twitter, again, where you can keep up to date with our latest blog posts and videos. So here we are looking at the S&P 500 on a daily chart. And our yellow dashed line here, that is our May swing high. And you can see we came down, tested it, bounced, came back, and then even on Monday and Tuesday of this week, we kind of went down there and tested it. The red wavy line, that is the 50 exponential moving average. Our red dashed line up here at the top is the April swing high. So you can see we basically closed at that on Friday. And here's our November swing high. I don't have a line for it, but obviously because it's right there in front of you. So we are setting up something here. We had a double bottom as we went up, but now are we setting a double top to go back down? Not sure. We'll see what the market brings for us. Again, we can see MACD's heading higher. So our daily chart, MACD is a little bullish. RSI is a little high. Stochastic is definitely high. So we're getting a little mixed indicator. MACD is saying we have more room to go up, whereas stochastics and RSI is saying we have a pullback. Let's go ahead and pull out longer and go to our weekly chart. We'll blow that up. And we can see the orange line is that 200 moving average that was once resistance. Is now acting as support. So that's certainly fine. Our indicators on the weekly are also pretty much overbought. Let's go even further out and take a look at our monthly chart. And our monthly charts still have a little bit of room, but finally, we've been saying they've had a little room for a while now, but our stochastic on our monthly chart is starting to get a little overbought here. RSI is heading up there. MACD still has a little room, so MACD is lagging. And we can see we're still above the 50 moving average. That's great. And you can see as we pull it up here that, and we go back over, here's 2009. It's been a long time since we've been in here. So it's back here in October of 2008 was the last time we were at this price level. If we look at the monthly chart, you can see a little bit into the 1260 range as a potential resistance. And as we were talking about, that 1274 range also. So we'll watch 1260 as a resistance as we move further above. But overall, I think our indicators are basically getting towards overbought. We need to watch for a pause, and we need to watch to see what the true market sentiment is going to be, since we don't have any news catalyst to move the market higher. Okay, as we move on to our education portion of our video, we're using Trade Your Way to Financial Freedom by Dr. Van Tharp. And we've been talking about the 7 key components to any effective trading system. And one of those areas is setups. And in this section, he talks about that the setup is actually only 10% of your trading system. Yet some people put 90% of their emphasis on finding the right setups, finding the right, 30-minute breakout, 50-minute breakout, swing high lows, whatever it may be. Some people spend so much of their time trying to find out how to get into the trade, and then their emotions take over and they don't know how to manage the trade. So understanding how to enter a trade and understanding how to make money on the trade are two different things. One of the things that you should consider in identifying your setups is understanding the market that you're going to be involved in. The liquidity, is it a new market? What are the volatility? How much capital do you need to use to trade that market? All these are important to finding the right setup, because what market you're going to be in will define what setups you should be using. So as we continue on, we're going to keep looking at how to develop effective trading setups. And actually, that's also a great transition into our free course. We have a free 5-part video course on how to develop a high probability trading setup. You walk through it. We go through the different areas of high probability trading. And we hope that that'll be a good introduction to our instructional video curriculum, where we have 3 phases: the building blocks of trading, all the different components of a trading plan, all the different trading setups, and how to manage the trade. So our free 5-part course will hopefully get you interested in purchasing our video course. But we also believe that it's not about understanding a setup, it's about having the psychological capital to enter those setups. And that's what our coaching is about, live one-on-one. We hold you hand by hand and walk you through the process of becoming a high probability trader. We've got a great future to relation with Global Futures. And again, we believe so much in the importance of preparing to trade. And Start Reflex will help you prepare before and after the market as hard as you do when the market is open. In the end, it doesn't really make a difference about your trading system, the indicators you use, what trading room you're in. And again, if you have the ability to recognize a high probability trading setup, if at the end you're not able to pull the trigger. And that's what we at emini-trading-coach are able to do. Take you from one level and being able to maximize all the skills that you have, put you in the right place to be successful so that you can pull the trigger on each and every trade. Thanks, guys, and I'll see you next time.